Kia ora and welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name is Alice Summers and I'm a journalist from BusinessDesk. Before we get started, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Today we're joined by Webster, who's the Chief Executive of Tourism Holdings. It's safe to say, Grant, that you've seen Australasian tourism industry go through quite a lot in the time that you've been with the company, from the GFC to COVID-19 pandemic to currently having to navigate a rocky economic environment.
Yeah, I'm sure there's been some positive elements in there somewhere, but yes, it's been a while.
On my way in today, I was thinking that some CEOs, drive work cars. As you, as the Chief Executive of Tourism Holdings, do you get to drive a motorhome as your work vehicle?
That would be great, but no, that would be an opportunity cost. So we'd rather get them out renting, but certainly had a number of motorhome holidays, there's no doubt about that.
Is there one that stands out?
Probably just a number of them in New Zealand, more than Australia or the US. Haven't done one in Canada yet, so looking forward to that. But yeah, New Zealand with the kids when they were younger. I think you find there's an age between sort of 2 and 15. Beyond that, it gets a bit cramped, depending on how many kids you've got.
Yeah, my dad would agree, and it's nice to hear that New Zealand offers the better motorhome holidays in Australia. First off, I'd love to hear a bit about yourself in your own words and what your background is and some highlights and lowlights from the many years you've been behind the helm of Tourism Holdings.
Geez, highlights and lowlights. So I've been with THL since 2005, dare I say it, CEO since 2008. So yeah, been there a while. Before that, I had the fortunate opportunity to work at SkyCity Entertainment Group. So I was responsible for the Auckland business there for a while and involved with a few different things, SkyCity Grand Hotel and other bits and pieces, and a decent long career in retail before that as well. So been in a few different industries, but really enjoying this one. So THL highlights and lowlights. I think you probably said a number of the lowlights, GFCs and COVIDs and so forth. Clearly, I think, we're a people-orientated business, and when you have to go through periods of making people redundant and so forth, those are the lowlights. The highlights are when we've been able to expand, particularly overseas. So, we're now the largest RV rental operator in the world globally, from a commercial perspective, based out of primarily little old New Zealand. So when we first entered the US and the UK and recently Canada through the merger with Apollo, those are the real highlights. So seeing opportunities for people out of all of that.
One thing that I wanted to touch on was, what did the COVID period, it's probably still going on, I guess, in your eyes as well, but that original kind of COVID period, what did that do to the business, and I guess what happened to kind of like fleet maintenance and replacement, and what did the business, a major tourism business like THL do during that time?
Yeah, so what we saw in the tourism industry was certainly in the publicly listed space across Australia and New Zealand, we saw companies look to investors for more equity, more capital, and do those capital raises to keep their balance sheets secure. So with Auckland Airport in New Zealand, Flight Centres, all the other ones, they all sort of took that path. We have a very sort of mobile asset with motorhomes, or globally still really called RVs these days. So we were able to flex the balance sheet. We did manage to sell a lot of fleets. So at the start of COVID, we had a debt balance around 220 million. We got that down to a low point of under 20. Now today, post the merger that we've had with Apollo Tourism and Leisure, which we'll talk more about later, no doubt, and with our fleet growth sort of coming back into play, we're sitting at around that 250 mark at the last half year end at December 31st. So we were really flexible from that perspective, but clearly we lost some money during COVID, so $14.5 million loss, and then followed by sort of a $2.5 million loss, and this year we'll be in profit, and a real profit and a record profit.
Yeah, which I guess is probably a lot sooner than a lot of investors and probably shareholders were even expecting, when we're seeing not just the general tourism industry kind of recovery in the last year or so, but just listed companies across the board. It's a bit of a slow recovery, so it's great to see that.
Yeah, tourism's rebounded at an enormous rate, which has created its own issues. As travellers ourselves, we've probably experienced it, right? And we've seen it, baggage handling and airports getting themselves up to speed, and prices in airlines and hotels and so forth have been sort of reflective of that recovery and lack of supply relative to demand. So it's been fast, it's been furious, created a whole lot of other issues, but exciting for the team to be back into a positive environment.
Yeah. Touching on that COVID time, I believe, thinking back to your the company's annual meeting from last year, I think, is it true that THL turned some of the fleet into Jabber?
Yeah, yes, we did. Jabberwocky, Jabberwacky was some of the branding that was used in Australia. So, we had vehicles that were used for COVID mobile vaccinations. We had some that were secure COVID areas and temporary housing and a whole raft of different uses. So that we call that now non-tourism, and it's probably one of the key lessons from that COVID period for us, that there was this other opportunity, this other market out there, and that's a market that we're investing in now, that we want to grow globally. Now, that's not saying that we want pandemics, but we recognise that sort of disaster relief or different needs that are short term, we can move our fleet to assist in that area. So that's definitely something we got heavily involved with, and we'll continue to see it as part of the business moving forward.
And jumping into, I guess, that diversification space as well, which was also another thing shareholders brought up at your annual meeting last year. So
diversification, it's interesting, isn't it? We probably think about diversification as diversification of jurisdiction and diversification of sort of product, as well as sort of the channels that you take to market. For us, diversification really should stay within your broader capability set as well. So those vaccination vans, we were still able to manage that for MB in New Zealand, for New South Wales government, for LA County. So that whole rental type management we did quite effectively. So that sort of fitted our capabilities. But we've also diversified through the merger with Apollo. We're now in Canada. We've sort of doubled the size of our business in the UK, so we're definitely more diversified there. We've done some acquisitions in our manufacturing space. We're continuing to look at opportunities there, so diversified there as well. But again, all linked around the whole rental, RV, motorhome, camper van space. So that manufacturing growth, that gives us a chance to buy more chassis. It gives us a chance to take that design elements from there through into the motorhome business and back forth. So it fits our capability. Same with that jurisdiction growth. When we've entered Canada, it's a very similar market to the USA, similar customers that we have globally. So more diversification to come from us as we continue to grow, but within the capability set.
Let's start on the numbers, I guess.
Yeah.
I like the sheet in front of you with the circles, a bit like me. Obviously, Tourism Holdings saw things kind of kick up a gear in their half-year earnings that came out recently. Is that going to be leading into the company's second financial half? What are you guys seeing, from here on out? So
the short answer is yes, and it is very positive. The complex side of things for us is that we just completed this merger with Apollo, who essentially were our largest competitor, publicly listed on the Australian Stock Exchange. So that completed on November 30th, 2022. So technically this financial year, we're June 30 year end. So technically we've got 12 months of THL as it was, and 7 months of Apollo. Now, most people want to actually imagine that it was 12 and 12 so they can get a general sense. So we talk about that as the pro forma result, as if both companies were together for 12 months. So when we look at that result or that expectation, we've said to the market that we'll be somewhere in excess of 75 million net profit after tax, which is by far a record for us as a company. If you wanted to take the Apollo first 5 months off, that's around 27 million. So it's saying we'd be above 48 on a sort of 12 plus 7 basis. So very positive, and the second half is going to be very positive as well.
I'm sure that you've talked about the Apollo merger probably more times than you've said your kids' names.
Yeah.
But if you could take me back to when it all started and just give me a quick run through of what it's been like, what the last year. I mean, I covered it a lot last year, and there was a lot of things going on.
Yeah.
So kind of take me through that.
I think I could probably pass a competition law exam now and never having studied law. So that's the downside. I think we made a lot of advisors very wealthy. That's the other downside. The plus side is we got there. So it started during that sort of still that COVID period. If you think back in that 2021 period, in 2020 we'd all gone, this is going to be over in a few months. In 2021 we were going, we thought it was going to be over, it's still not. So as we looked at that opened the door for us jointly to have discussions with Apollo and say, what does the future look like, and are we better together? Can we have a more effective cost base? Are we, a stronger balance sheet collectively compared to the two separately? Started the discussions. We started the initial work with that. We announced it in December 21. And everyone, this is interesting, great, cool, share prices went up. Then we started getting into all those regulatory reviews, predominantly the NZCC and the ACCC, both the competition regulators in New Zealand and Australia. And that took a lot longer than what we expected, and that was more challenging than what we expected.
What was the challenges?
Again, this is getting to the arguments of competition law, but so we the way we had seen things is that when you go to do a holiday, you think about the destination, then you start to think about what kind of holiday you want. And you might then go, look, I'm going to do a car and hotel or whatever else. I might do bus, might do train, might do whatever. And so we saw ourselves in the motorhome segment as a subset of that. People make their decisions based on the different pricing. So we actually saw we were much further up the funnel than the Commerce Commission's thought. They actually went, no, you're actually a motorhome market. And then they said, actually, the peer-to-peer market, the Airbnb equivalents in our space, no, you can't count them either. And then they said, actually, we think there's a sub-market here between the different types of vehicles. So they just went so much more narrower than what we expected. And so ultimately out of that, we said, all right, okay, this has taken a long time. What if we work with a competitor and sell some of the assets to them? So we sold 310 vehicles to Juicy, and they got the Star RV brand as part of that and the bookings that went with all of that. And that divestment satisfied the competition, that there was sufficient competition in the market in the definitions that they'd created. So it's a long, boring answer to the fact that they just saw things a lot more narrow than what we did. But we got there in the end. 12 months later, so as I say, November.
Which in
22.
the corporate world isn't actually that long, so in some ways...
Yeah, it felt pretty long.
Yeah,
I can't quite say that I had a full head of hair and it was a different colour, but it certainly felt like it took a few years off those that were closely involved,
My favourite part of the annual meeting last year was when I asked you what you're hoping to do over summer, and you just said, not answer any more regulatory questions.
and I didn't answer any regulatory questions over summer, so it was a successful summer from that perspective.
Well, when I was coming in today, I thought, I wonder if Grant was successful or not, But
there's a whole lot of other regulatory things of interest to some people. So this was, we understand, we haven't been given official information, but we understand this was the first time a New Zealand listed company had actually done an acquisition of an Australian listed company under a scheme of arrangement, which is the methodology that most takeovers are completed these days. There's been other growth acquisitions, but of this nature, so that created a number of challenges along the way as well. But again, a really dedicated team and people that were right into it.
Obviously you kind of face challenges from like both Australian and New Zealand regulators, but what were your shareholders saying? So
shareholders were highly supportive. So I think I might get the figure slightly wrong, but the Apollo shareholders had to have a vote, and it was 99-point-something%. So highly, highly supportive. The institutional investors were very supportive. Those that invested in Apollo or THL pre the announcement or even post the announcement have done exceptionally well from a share price perspective. We made a commitment that we would deliver a really good synergy number out of this transaction, 23, 24 million, or on a cash basis up to 30 million. We are on track to deliver that. The actions that we're implementing are really working well. So it's probably the FY24, FY25 period that they'll really come through the P&L. But that's such a big number that investors have gone, hang on, you're a tourism company with tourism recovery. You've actually got some fleet growth that you see coming over the next few years, and you've got these cost synergies coming through as well. That's a pretty rare kind of recipe for growth these days. So that's created a lot of interest.
You've spent a year kind of battling, I think that's probably the right word, battling the regulatory environment. How's it all going with Apollo now?
Yeah. Really, so we've been really surprised. We've been surprised how aligned the cultures have been. I mean, when you've been competitors for so many years, you have that competitive sort of thread and you have a particular view. But once you actually come together and you have a couple of things. One, you have those regulatory hurdles to overcome together. That brought us together. And part of that was that divestment and getting all of that done. And then just the challenges of coming together, the system integrations, everything else. People have gone, we're actually very similar, and we've actually got the same kind of issues to deal with. And so it's been really, really positive and really surprising. We had a little nice similarity in that Apollo have been very orange in their branding and their themes, and orange is actually a colour in our branding as well. So the integration's been called Project Orange. So that's been sweet.
How has North Island kind of flooding affected the summer season? I guess your, projections for, summer as tourism central in New Zealand. No one was expecting cyclones, floods, everything else that we got. How was that for the company?
So, I mean, look, we were talking before we started recording that, Hawke's Bay's been really tough and a terrible situation there, and all right across the east coast, right, and obviously the flooding here in Auckland. So, and as you said, I grew up in Hawke's Bay and Napier, so I really feel for friends and family that are down there and what they've been going through, and tourism in general. From a THL perspective, we've been exceptionally fortunate. So we haven't had any issues. We didn't have any cancellations of note. We didn't have any vehicles impacted. Some of that will absolutely be good fortune. There's a little bit of it, I think, is because we got a lot of messaging out to customers. We were very, very focused on making sure that people were in the right place and that they were doing the right things. So we think that helped somewhat, but ultimately we've been very fortunate. So no impact from any of those perspectives. It's interesting. Some people have said, what about the impact on New Zealand's brand? I was just at ITB, is a large global tourism event in Berlin that hasn't occurred since pre-COVID, obviously. And I was there in early March. And New Zealand, there was no questions or issues about New Zealand and New Zealand's profile. So I think people just accept that these things are world events, and they all happen, and we move on. So,
where was the busiest places for tourism holdings around the country?
So Christchurch, your hometown. So Christchurch was certainly our busiest location over that core summer period. Absolutely, yeah. And people obviously heading down and enjoying Queenstown and Southern Lakes. So we were still busy in Auckland. That's a large branch for us. But so across both islands, but South Island won out on those core summer periods.
Oh, amazing! And I guess I'd love to know from this year, what has kind of been how much of the business is made up of domestic versus international. And also, what is that looking like compared to pre-COVID numbers?
Yeah, so pre-COVID, on a New Zealand basis, we were over 90% international. And that changes around the world. So Australia was sort of, 60, 65% international, US, similar-ish, a little bit more domestic. And UK more international as well. So clearly that changed completely. We're in recovery, so there's no month if I gave you any stat, it changes every week because international are coming back to a larger and larger extent. So it's just been that transition back to international. Domestic is still well above what it was pre-COVID. And we think in all markets we've engaged people more domestically. We sort of have got better at marketing to domestic when we were so focused on international. So we think domestic will be a bigger part of the business moving forward in all our jurisdictions actually, but here in New Zealand as well. Probably most tourism businesses I think are suggesting that sometime in 2024, maybe the 24-25 summer will be when we're getting close to back to pre-COVID levels from an international visitor perspective. So that probably still feels about right. We'll see what happens between now and then.
How important is airline capacity to the growth of kind of the Freedom campus, tourism market, and how much has the current kind of, airline issues that we're currently going through, like with, flights being so expensive, people struggling, to even get on planes. Yeah. How's it affecting you guys kind of?
Yeah. So right at the moment, we've actually, airline capacity's come back at a greater rate than what we've been able to get our fleet capacity back. Mm-hmm. So we haven't had a sort of a real issue yet. There is clearly this real issue, or question, I would say, about pricing in tourism, pricing in airlines, and when or if is that going to return to what level, and nobody knows. My personal views are that prices will probably forever be higher than what they were pre-COVID because we've gone through the largest inflationary environment for 30 plus years, right? So they need to be higher or businesses won't survive. So that's just a reality. How much higher, and will they come down from where they are? Yeah, they will come down from where they are. That'll take some time. Airline capacity at the moment around the world is probably around 75% of where it was pre-COVID. But I think that's going to, again, return over the next sort of 12, 24 months in general around the world. Might be slightly different for Air New Zealand. They might be slightly less. It might be slightly more for some of the China airlines or some of the Middle Eastern airlines. We'll just have to see what happens. In terms of the freedom camping or the backpacker part of the market, that kind of, some would say, cheaper end of the market, they're still staying for long periods of time. And they still seem to be spending more on the same kind of relative basis that all the other categories have compared to pre-COVID. So people just, I think, accept and want to get out and enjoy. So they'll trade off different things as they go, right? They might have wanted to travel for 9 months and they travel for 7. Or they might have done X number of weeks in New Zealand and then some at a cheaper destination like Thailand or Vietnam, and they'll change that around a little bit. But they're still travelling and still spending. Because that's what's sort of in our hearts, right? And that's what we lost for so long during COVID. And people just want to get out.
Yeah, satisfy
that innate need to explore, to see, to connect, to experience. Yeah, that's what people want to do, and that's what they are doing.
Tourism Holdings listed on the ASX in December last year, so another big thing the company ticked off. How's that been? What are the differences between the NZX and ASX? Take me through it.
So this is a podcast that's not meant to put people to sleep. So I won't detail the differences between the NZX and ASX.
I don't know about our listeners,
we can catch up with that, Ella.
Yeah,
we can catch up with that afterwards. So look, broadly for us, so in our merger with Apollo, they were ASX listed, so it made a lot of sense. Yeah. We had been looking at it for some time, so this was the catalyst that said definitely do it. We would say it's been very positive. It's been very positive from a number of perspectives. It's increased our liquidity, the number of people interested in the shares. So anyone buying into THL knows there are more shareholders now. There are more people trading on a more frequent basis. So that provides people with a security. If they buy in but need to sell, generally if a company's got more liquidity, it makes it sort of easier for shares to move. But importantly as well, from an institutional shareholder perspective, those big super funds and all those sorts of entities, private wealth entities, and there is the number of Australian institutions that didn't have or don't have a mandate to purchase NZX only companies really surprised us. So we'd been out there for the last 12 months really talking to a whole lot of people that we hadn't talked to before, and they're going, when you list on the ASX, we'll be interested. If you list on the ASX, we'll be interested. So we did. They've invested. We've got more people on the register. So it's great. So we found it really beneficial.
Are there any challenges that becoming a dual listed company
Yeah.
brings to the table?
Yes. So there are just there are details that are really hard to grasp. And the ASX are really good from a compliance perspective. They're very supportive. So we'll release something in normal fashion. And they'll ring up and say, hey, actually for the ASX you need to do this way, you need to do that, and have you thought about that question? And again, you've just got to sort of think a little bit more and ask questions. Yeah. So one round of those sorts of things and we'll get it right. But we're not breaching anything, just sort of making sure that everything's doing it the way that they want to do it. Yeah.
I was really interested in your half-year results. THL said that the United States rental division remained constrained.
Yeah.
Why is that? Take me through that.
Yeah, so supply constraints, so vehicles from manufacturers. So in the US and Canada, we predominantly, we go to manufacturers of RVs over there. We don't build ourselves over there, but they're on Ford chassis, big E350s, E450s, big things. And Ford have been really, really low on stock. They've had all the different supply chain issues that you see in the automotive market. And last year, that constraint came from there were 200 vehicles that we were expecting to arrive for the high season, which is summer, June, July, August. It just didn't arrive. So that was the constraint that we had in that environment. That's improving at the moment. But interestingly, around the world, we're still seeing some supply issues and disruptions probably throughout this year and probably most of 2024. So the world is not back, is not normal. There are definitely challenges.
Yeah. And I guess how are you guys hoping to kind of manage that or get around that in the future, kind of going forward?
Yeah, so we've had to plan further and further in advance. And we've gone to more and more different suppliers, so that's mitigated things this year. And as I say, Ford are in a slightly better position this year. So, adjust our expectations, broaden the market that we get product from, and work on that basis. Interestingly, with some of the shortages, so we tried to do what we called a buyback in New Zealand last year. So we had sold so many motorhomes, we said, I wonder if some of these people want to sell them back to us and travel overseas. And we talked to hundreds of people and only got a handful that were prepared to sell. People just going, love it, leave me alone. It's 100%.
Yeah. I guess that leads us nicely into the outlook. I know THL is feeling quite positive about the outlook, but we're also in a very complicated economic environment. We're heading into tentative recession, depending on who you talk to. What does the future hold for THL?
Look, you talk to probably more people than I do. I think I think the benefit that we have from a tourism perspective is that we were on the floor, right? We'd been knocked down onto the floor, and other businesses and industries were standing up. So we've started standing up. And we're not, and I know I get comments about my height, but we're not standing at full height yet. So the benefit that we have is I guess, the ceiling's coming down economically, we know that, but the fact that we're not standing at full height means we're not getting our head hit yet. How far the ceiling falls before we get to stand up fully straight is a question that we don't know, but certainly right at the moment we still see headroom for growth. We still see that there's positive aspects to tourism. We're certainly seeing that people still want to travel. There is a lot of people, we had basically 3 years of people not being able to travel. And, when you look at unemployment rates around the world still haven't climbed. So most people are still in employment. Yes, confidence ratings are down, but tourism, travel, vacations seems to be, in any research we see, right up high on people's desires and wish lists. So they're foregoing the fridge replacement, the car replacement, those sorts of things, hard assets for a tourism experience.
Out of completely journalistic interest, are there any motorhomes that THL has that you don't bump your head in when you're in?
No. So it is a little bit of an internal joke because I became CEO in 2008 and we did a major design change, and those vehicles launched in early 2010, and they do happen to be a little bit taller inside, and I can stand up in them. So yeah, I don't. I don't think that was actually, I don't know why that happened, but yes, I can stand up in our vehicles in New Zealand and Australia, not so much in the UK.
Grant, how tall are you?
Are we talking metres, or are we talking back in, so I'm 6'6", I'm over 2 metres, 2 metres and 2 centimetres.
Very good.
Taller in person than on screen.
The economic conditions are looking quite good for you guys then, obviously, although it's a very tentative, again, rocky environment. But does that mean that THL thinks they can pay a dividend?
Yeah, I mean, I had nearly forgotten to raise that, and it's such a critical point. Thank you, Ella. So we have indicated that all things being equal, as you say, and given the positive outlook that we have at the moment, no more cyclones, no more pandemics. We are keen to resume dividends, so we're suggesting that all things being equal, we will resume at the end of this financial year. That will be most likely at a lower payout ratio than what we used to pay out pre-COVID, and there's a few simple reasons for that. Much more of our business is overseas now, so you don't get the same imputation credit benefit, so we want those imputation credits to work well, franking credits in Australia, so that's part of it. And part of it is that we still have desires for further growth, further M&A activity, so just making sure that the balance sheet's in a positive position to help enable that.
Nice. I guess that brings me to my final question that we ask all guests. What is one key takeaway from today's episode that you think investors need to know? Not your height, I'm going to take
So I guess the one key thing that I'd like people to think about THL is that here's a company that actually survived through that COVID period, the worst tourism period in the history of tourism, didn't have to go to shareholders to raise money, actually changed things. We actually bought the other 50% of Action Manufacturing, the other 51% of Just Go. We bought a number of other little small businesses and divested a couple of other things. So we changed, we adapted, and then we did the biggest transformational merger in our history, all through that period. So we're good to go. We are a different organisation than what we were pre-COVID. We've learned lessons, and we are in a positive tourism environment, albeit the economic environment's different. So that wasn't really one, was it? But that's the...
You're ready to ramp up a gear and just, take off.
We are ready to ramp up and take off.
Thanks for tuning in. We have a special offer for Sharesies investors from BusinessDesk. If you use the promo code SHAREDLUNCH2023, you'll get $100 off an annual subscription to BusinessDesk, which is usually $249, including GST. The offer only applies to new BusinessDesk subscribers, can only be used once per subscriber, and can't be used with any other discounts. That's all from us today. Enjoy the rest of your week.